It's time now for Charting Futures, and here's Abigail Doolittle. And Abigail, stocks are down, but there's a twinkle in precious metals today.
I like the way you're putting that, Romaine. There certainly is a twinkle for precious metals today with that Bloomberg dollar index down. We have both gold and silver higher. That's the story of the year, too. Let's hone in particular on silver futures. Here we have them up 15.7% on the year, more recently being helped out again by that weakening dollar. It's also being helped out by money managers really liking silver. If we take a look at this chart in the Bloomberg terminal, it's a longer term chart, and what we're looking at here is the silver managed money index, and below the yellow line tells you that managers are short, above a net long. So we see that basically coming out of the financial crisis with all the Fed's accommodation, QE, various rounds of QE, silver was viewed in a bullish manner by money managers, especially back in 2016. But in 2018 and 2019, the shorts took over. However, this year, once again, more of a bullish view there by money managers. And I think that will include the chief investment strategist of Quad Group, Peter Borish. Thank you for taking the time to join us.
Thank you.
And you like silver right now, and that seems to be the view of money managers out there.
So we like silver. We like the commodity complex. You know, when you think about it, you think about in the 2000s, that was sort of the decade of bonds. This last decade, the decade of equities. Could this next decade be the decade of commodities? Stocks, interestingly, bottomed in '09. You know, silver, if you look at that chart, bottomed earlier in the year. You know, was 1989 the right time to be buying Japanese equities? Was 1999 the right time to be buying technology stocks? So you want to think what has been out of favor. You're seeing that shift from negative sentiment to positive sentiment, and that can carry for a bit of a way, whether you want to play it in options or whether you just want to play the breakout in silver as it gets above 1840.50.
Well, if the next decade could turn out to be the decade of commodities, poor man's gold would be one way to do it for sure, especially with silver going back above that 200-day moving average recently.
Well, it's just on the 200 moving day. You wouldn't really consider it a significant breakout yet. But yes, so the initial momentum is there, and one thing that we've said, and I say repeatedly on here, right, range expansion equals price expansion. Our ranges are breaking out to the upside. Likely prices will continue to break out to the upside as well.
Okay, and so it sounds like you think that silver is going to go right above that $17 per ounce. Where to if it does?
Well, I think if you look back and you look at a chart of the current futures contract, you'll see that it can go up to 1850, and then the highest level is 20. And then from there, you have to remember, it came from 50, 49 and a half.
Yeah, that was extraordinary.
Right, that level. Then came all the way back down. So even if we do a normal retracement, if you don't think it's a bull market and going to make new highs, you still have a long way to go to the upside.
Well, that area of congestion there certainly looks like a bullish flag of some sort. If back above 17, you would probably see
so
it
you
confirmed.
and a triangle as well.
Yeah, and that, I mean, you could really make the case for 22. So you were mentioning options on silver futures. Let's take a look at some of, you basically are saying that you would want to buy calls.
Well, volatility is low, and that, which is unusual in the commodity complex, but volatility has been low across the...
Why is it low here then? Or you're saying it's across the commodity complex
It's been because you haven't had net ranges, you haven't had major moves yet, so you, by buying a call, you're not paying an inherent amount for the premium relative to where you would after a market moves. Right after the market moves, you either want to move to futures themselves because you don't want to pay all that implied volatility. Right now, there's not a tremendous amount of implied volatility. Good trade.